Luxury goods brands come under the spotlight during next week's busy corporate diary in Europe. Welcome to Market Insight, I'm Ramzan Karamali. While the likes of Burberry and Kering have results out, as well as Europe's largest chip company, ASML. So what can we expect? Well, to help answer that and more, I'm joined by Toby Gibb, Head of Investment Solutions at Artemis. Toby, thanks so much for joining us. Well, let's start with LVMH. It's the biggest company in the sector. It actually reports later this month, but it's likely to set the tone for the whole sector. What are you expecting?
Sure. So LVMH, I think, will be heavily scrutinised as it's very much seen as the bellwether of the luxury goods sector. We do expect this to be the trough from a revenue perspective. So expect to see similar levels of growth, about 2% as we saw in the first quarter. And really, an end to that sort of normalization of earnings after the big boost that the sector saw sort of post the pandemic. And from here we can really start to see a bit of an acceleration. We've had results from Bruno Cucinelli, so those results are actually pretty strong. That's a slightly different company in that it does really focus on the very high-end consumer, but I think that's positive read across for LVMH for next week. And what we're really looking for is what the company says about the rebound in outbound Chinese tourism, which is important, particularly tourism to other markets in Asia and Japan, and also what they say about the strength of the US consumer. One thing to look out for will also be the cost of marketing. So LVMH is a sponsor of the Olympics, so there will be some upfront costs there that will impact profits.
And Toby, on Friday we get Burberry Q1 results, and last time we heard from them, it wasn't very pretty, to be honest. Annual profits were down over a third. What are you hoping for this time?
I think the market is going to remain challenging for some of the sort of the second tier luxury brands. So the likes of Burberry, also those brands owned by Kering, such as Gucci, which are struggling a little bit, trying to put through price increases. To sort of raise the profile of their brand, but also are more heavily impacted by the sort of the aspirational consumer, but also sort of the wholesale department store market, which has been challenged. So expect to see continued sort of bifurcation in the luxury goods market with the likes of LVMH, Bruno Cucinelli doing much better, and some of those names like Kering, like Burberry being somewhat challenged.
And just very briefly on Kering, I noticed that its share price year to date is down around 15%. What do we need to hear from them this week when they report to sort of turn that trend around?
Yeah, there's a lot to do. That they do need to see improvement, particularly in the Gucci brand. So that I think will be a key focus for Kering.
Now, ASML, Europe's largest chip maker, also has results out as well. Are we expecting some more positive news from this sector?
Yeah, I think we could be. So Q1 results for ASML were pretty disappointing, as we all know. That followed some pretty strong results at the tail end of last year. Estimates for Q2 are conservative, and I think that's reasonable given what we saw in Q1. But there is potential for the company to surprise on the upside in the second half. The company has said that 2024 would be something of a transition year for them. But there are a number of catalysts that could come through in the second half of the year as they move through that transition and into the quite positive trajectory that we're expecting to see in 25 and 26. So that means big pickup in memory demand, which we're starting to see, but also some big orders coming from the likes of TSMC. So that will be where the focus is on those orders and whether any of those are sort of being booked for the second half of this year.
And Toby, we've heard from some of the big US banks today. What have you made of what we've heard so far?
Yeah, something of a mixed bag in terms of the results we're seeing so far. So, Citi in particular saw quite a big increase in costs, and clearly the sort of the restructuring plan there is proving tougher than they'd anticipated. You would expect it to be a reasonably positive environment for the sector at the moment, with rates quite high, with volatility quite high. But clearly with the news that we had last night, the potential is for interest rates to come down, which will be less of a tailwind for the sector. I think the other thing that I'm looking out for, and will be looking through the results for, is what they're saying about AI and sort of projects that are being actually started, and money being spent on AI projects within the big banks, because that will have a big impact on more broadly across the US market.
Toby Gibb from Artemis, many thanks for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.